Good afternoon, everybody. Welcome to the Moving Markets Podcast. Today is Tuesday, May the 27th, 2025. I hope everybody had a great holiday weekend. I know for some it can be a fairly somber weekend, but we celebrate those people who made the sacrifices for our country on Memorial Day. And so, hopefully it's a time when you can gather together with friends and family and enjoy that time. And if you're outside the U.S. or you don't celebrate that holiday, you had a day off from trading the stock market, which is not a bad thing. One extra day to relax and not worry about what your money is doing. And hey, let's face it, we woke up to some good news. We had some good news over the weekend, and we woke up to a very robust market as far as the indexes go currently, and it's got a little bit of a delay on it right now. By the way, I'm recording this at 12:30 Mountain Time, so the stock market has about an hour and a half left to trade, but I've got family in town for the entirety of this week, and so I'll do my live podcast tomorrow, Thursday, and Friday, but today I am doing this a little bit earlier than normal. I've already sent out the Signal newsletter, and I want to talk about that trade a little bit. But we got good news to start the trading week. Over the weekend, President Trump said that he was going to pause the tariffs on the European Union until the 9th of June. Now that's barely a week, week and a couple of days past what he was going to do, which was impose them starting on June 1st. But I want to comment a little bit about this tariff situation, because I think over the weekend, let me back up a little bit. Without a doubt, it is the announcement of that tariff pause that you can see right here in the headline, EU tariff delay and consumer confidence surge. So right now, with an hour and a half left of trading, NASDAQ up 451 points, S&P up 117, Dow Jones up 709. In the case of the S&P and the NASDAQ, those are both over 2%, NASDAQ almost 2.5%. And in the case of the Dow, 1.75%. Those are great one-day moves. Those are very strong one-day moves. We don't say great when they're negative, but when they're on the upside, we say great. But here's the thing. I want to comment a little bit about the tariffs and the way the market reacts to the tariffs. One particular thing I want to note is, whether it's positive or negative, it feels to me like there is an overreaction every time there is news about the tariffs. And the reason I call it an overreaction is because we have 4 years and almost 5 months now, 4 years and 4 months, let's call it that, of evidence that the worst case scenario and the best case scenario from these announced tariffs almost never plays out. It's almost always somewhere in the middle. And I would even go so far as to say it's the middle, but leaning towards the more positive outcome. Every time Trump announces a tariff, I wish people would take a step back and say, this has less to do with him wanting to indefinitely punish this other country with really high tariffs and make it hard for them to sell things in the United States, make it hard for the U.S. consumers to get that particular product. It's a negotiating tool. And time after time after time, he is getting what he wants out of these threats of tariffs. He is getting the country or countries who are horrible about tariffs and non-tariff regulations on U.S. products coming into their countries. They're awful in what they do, and they've been getting away with it for decades. And in every case, he gets them to come to the negotiating table, and he gets them to come closer to our side. Maybe not 100% of the way, maybe not a perfect scenario every time, but he gets movement in the favor of the United States. And that's what he is supposed to do. He's our president, for crying out loud. He is supposed to get deals that work in favor of the American people. And I would say other countries and other economies be damned. And I don't say that out of spite, and I don't say that to be mean, and I don't say that because I want to see other countries fail. But he is not the president of the United States to make trade better for other countries. He is the president of the United States to make trade better for our country. And that's why I believe every time there is something announced officially from the White House, whether it's the president himself or one of his surrogates, every time something gets announced about tariffs, there is an overreaction by the stock market. It's like all of these brokers, all of these money managers, all of these people who we sometimes refer to as smart money. I'm sorry, but at times they seem to be the dumbest people in the room. And they may not be the smartest people in the room when they're in the bathroom by themselves. It just seems like they lose their mind and automatically they think the worst case scenario, the sky is falling, everything is doom and gloom, everything is going to fall apart, the country's going to collapse, the economy is going to collapse, cats and dogs living together, it's mass hysteria. And it never happens that way. It has never, ever, ever happened that way in the 4 years Trump was president a couple of terms ago, and so far in the 4 months he's been president, been sworn in as president this time around. This doom and gloom, the sky is falling mentality, I don't think it's good for the market. Now, I don't think it's great for the market when everyone feels like everything is perfect and we buy on a little bit of positive news. I just wish there was a more even keel. Look, I love what's happening today. My own personal portfolio is up very nicely today. A number of our trades that we have open are looking really, really good today. So it's not that I don't want to see a big move like this in the market. I don't love the reason why we're seeing it. I want to see big moves like this because there's economic data that comes out that shows a really strong economy, a really strong job market, low inflation, lower interest rates, lower oil prices. That's the reason I want to see the market going way up. Not because, oh, we're going to hold off for 9 days on imposing these tariffs. Really only 8 days because it's the first to the ninth. We're going to hold off 8 days on imposing these tariffs. Everything is all of a sudden magically better. Let's buy and make the markets go up 2.5%, 3% in a single day of trading. I mean, again, I love the markets being up. I'm always more bullish in my portfolio than bearish, except in times when there are definite economic trends that suggest you got to be more bearish. But if tomorrow someone from the EU says, I don't think we're ever going to come to terms on what Trump wants, we're going to give up everything we gained today and then some. And I think it's just a dangerous thing. And I wish like crazy that these people, pulling the strings and making the large buy and sell orders that have the ability to move prices and move the market. Honestly, I wish we had a more logical, level-headed group of people there. I think sometimes they're incredibly paper smart and common sense goes out the window. I believe that happens sometimes. So prove me wrong. I mean, if I'm wrong, prove me wrong. All right. So with all that said, there's my commentary. There's my riff. There's my rant, whatever you want to call it. Let's talk about this new trade that we're putting on CrowdStrike. Now, I like CrowdStrike as a company. I love the idea of being long-term in CrowdStrike. CrowdStrike reports earnings the beginning of next week, I think Tuesday of next week. I would love to have put on a trade on CrowdStrike that was non-directional, something that, big profits if it moves up, big profit if it moves down. The problem is the pricing on a long iron condor or a double diagonal, it just wasn't there. The pricing was absolutely horrible without going so far out of the money that you run the risk of just no matter what the movement is, it's not big enough in either direction. And that's what we don't want to see happening. So as I looked, I thought synthetic collar trade, and even the price on a synthetic collar trade felt a little bit on the high side. So all we did was a normal synthetic collar trade. We went out in time to get a long call, a little bit out of the money. We went a little bit nearer term with a short call, which is basically just a bull call calendar. And then we went much nearer term with the long put, but to help mitigate the cost a little bit, we just added a short put so that we're protecting ourselves with a bear put spread instead of a long put. It's just a simple way of protect. We do this in collar trades all the time. We do a bear put spread or a bear put calendar in place of a traditional bear put spread as a means of, in place of a traditional long put as a means of protecting ourselves. We pay a little bit more money, or excuse me, I'm sorry, we pay a little bit less money, and we get close to the same kind of protection that we would get, where we might give up a little bit of the protection to the downside because of where those short puts are. We pay less money, so we're not risking as much money if the stock were to take off to the upside. So we now have a trade on CrowdStrike with the 480. We did the October. Whoops. I'm getting this situation where the screen keeps going out again. Bear with me. All right. So we've got the 480 long puts out in October, just out of the money. We've got the 500 short put. Keep this in mind, because the difference in strike prices right here is a full $20 a share. That's important. Let me make that look like a 2. That's important, and I'll tell you in a second the reason that's important. Then we have over here a long put in June 20th for 470 and a short put for 460. Now, I know if there's a big miss on CrowdStrike, it's probably dropping down way below 460. I'm well aware of that. Probably the strongest level of support is somewhere, the first level of support is somewhere near the 20-day moving average, down here around 435 or 430. That's okay. We're going to get $10 a share in the bear put spread, the difference between the 470 and the 460, of course, minus what we paid for it. But we're also going to be able to take that short put and roll it straight down, maybe roll it down and in, and get a credit for that. And I'm long-term very, very bullish on this company. Even if they stumble a little bit going through these earnings, I don't think it's going to be a long stumble, and I don't think it's going to be a dramatic stumble. I think it'll be a temporary thing, and I think the ship will right itself, and I'm long-term bullish on this company for a lot of reasons that I don't have time to get into. So super easy trade to adjust. Don't worry about the 460 short put and how that caps what we can make on the long put if there's a move to the downside, because in addition to the bear put spread making money, a maximum of $10 a share, keep in mind that rolling down that short call is going to also bring in some more money, and the short call is going to lose money, hopefully a little faster than the long call, which also offsets any loss in value of the long call. So I think we're set up really nicely if there is a bearish move. If there is a bullish move, one of the greatest things about this trade is we've got a $20 difference in the strike price of our long call and our short call, and the trade is only costing us around $19 a share to get into. And that means that if by some freak chance this thing skyrocketed over $500 a share and we got called away early, we're guaranteed at least a little bit of profit in here. And that's without any adjustment on the put options. That's without any adjustment to the short call. We would be guaranteed profit if this thing, not a lot, not a very little bit, in fact, 5% max, but we would still have profit if this thing took off to the upside and absolutely skyrocketed for us. So I love the trade in that sense as well. So there's the new trade for the week. As far as other things go, our CRWV, I thought this was so funny. I hope it's still here. Look at this. This is fantastic. CRWV downgrade. That's the pro tip from CNBC. CRWV downgrade. That's interesting. CRWV on a day that someone is downgrading them, they're only up 17%. It's absolutely ridiculous that they get a downgrade, and whoever downgraded them could not be more wrong. So our CRWV trade is already up in the neighborhood of a 20% return, I believe. 15.88 is what this is saying, but I think if I refresh this, it's going to be even more than that right now. I did not send it as an adjustment with the Signal newsletter, just in case there's a little bit of pullback in the next day or two. I'm going to watch for that. I'm going to see if we get any kind of a pullback with CRWV. And if we do or we don't, I'm going to roll that 100 strike short call out another month, maybe 2, and roll it up to 105 or 110 strike. We're already, with this $10 strike price difference right here, we're already guaranteed some profit in this trade if we were to get called away at the 100 strike. So this trade is absolutely fantastic. Nvidia having a great day today. Actually, let's go back to Walmart. Walmart still down a little bit, but our short put is getting worth less and less value. And I didn't do it with the Signal newsletter. I'm going to watch for another day I think I want to add a 100 or 101 strike short call to the trade, but I wanted to see if they go up a little bit more today and maybe tomorrow morning, and then we'll add it for this week or next. We've got plenty of time to adjust this trade to profitability, and I do think Walmart is likely to break out of this little range that it's stuck in. Our AMD trade looking good. It is up over 20% return right now. I believe I want to stay in this trade a little bit longer. I think what I might do in the next day or two, if they continue to move up, we might roll out the 120 strike. We've got a number of months we can roll that out to increase the chance of more profit on that trade. Nvidia is looking fantastic, but hopefully you got the adjustment and added this bear put spread to Nvidia, a very, very short-term bear put spread, but with a $10 difference in strike prices, such that we can get we'll be very well protected going through this earnings, and no short calls on Nvidia. So if they take off to the upside after this earnings, we'll quickly adjust this into a bull put spread and just let Nvidia run, continuing on the upside. So that's looking very good. And Palantir, early in the day today, it was up a little bit. It's down a little bit right now. Not sure why. I know that there was some insider selling on Palantir. I think that's just some profit taking and some people at the company that need some cash. I wouldn't read too much into that. I personally think Palantir is going to continue up very strongly. And CrowdStrike is going to have an effect on Palantir because they play in the same arena. If CrowdStrike says, "Hey, everything is good in this sector," you could see Palantir get a little boost from that. You can see on this chart they were up a lot more today, up quite nicely today, only to be just a tiny bit in the negative today. Again, not too worried about it. I'm not going to worry at all about Palantir unless they cross over negative on our technical indicators. Our collar trades are all looking great. For those of you that are members of the Triple Play program, 3 new trades went out. Actually, 4 new trades went out today. One of them did not fill and got canceled when one of the other ones did fill. I put out a trade on Dell after the one on Alta because Alta just did not look like it was going to fill. And so as soon as this trade filled on Dell, I went ahead and canceled the order on Alta. I might try again tomorrow. They report on Thursday after the market closes, and there would only be 1 day left in the week for them to trade. But if the mid price on Alta changes a little bit, I might try that trade again. But for now, we got into new long iron condors on Nvidia, Marvell, and Dell. All 3 with expiration dates not this Friday, but next Friday, just so that we have a little bit more time to adjust if the stock price wobbles a little bit following earnings. That does happen sometimes, and it can be a little bit tricky to only have 1 or 2 trading days left to make an adjustment to the trade. So I'll talk more about these 3 trades for the Triple Play members as we go through this week, because we have Nvidia's earnings tomorrow after the market close, and I think Marvell and Dell, I think, are both. I want to say they're both on Thursday, but I'll double check that. They all 3 report earnings this week, and we had a phenomenal week last week. We kind of escaped PANW with a little bit of profit on Friday before it collapsed, but we got a very nice profit on SNOW and HD, and hopefully we'll add even more to that this week as things go on. All right, I'm going to wrap. Let me one last thing. I think we got consumer confidence today, and it was a better than expected report. That is certainly helping. It was expected to be 87, blew that away with a 98. That's fantastic for consumer confidence. Going on through the remainder of this week, the FMC minutes tomorrow we got to pay attention to, and then GDP on Thursday. PCE on Friday, which is an inflation report. So plenty of reports going on this week. We'll talk more about those starting tomorrow morning. I will be live tomorrow morning, about 30 minutes after the market opens. Hope to see as many of you as we can on live with us. And in the meantime, have a great rest of your Tuesday. Thanks, everyone. Bye-bye.